Hello, welcome to the Crypto with Kash Cast, episode number 26. Me and Kash are back. Me being Duncan Moreland, I'm your host, and I'm joined by Kashaya Bassi. Hello, Kash.
Hey, how you doing?
If you haven't watched before, Kash is our resident crypto expert. He knows everything about crypto. He can predict exactly when Bitcoin is going to go up and down. That's why he's able to sit in that lavish office space. I don't know what your background is today, Kash.
It is a very lavish background space, as you said.
It looks like you've got about 5 halos above your head.
Well, that one there kind of looks like Mike Wazowski from Monsters Inc.
That's where you are, is it? Just hanging out.
Yeah, Monsters Inc.
How are you doing?
Yeah, I'm doing pretty well. Better than last time we had a chat. I think we were both feeling a bit down.
Yeah, we had an ill podcast.
Down and ill. But I think there was definitely something going around, and I think there still is. A lot of people on the tube are coughing and sniffing.
Yeah, I hadn't thought about being in London while everyone's like spewing up their guts.
But yeah, I mean, it's winter, so it's to be expected.
Yeah, it feels like we're all vulnerable after 2 years of hiding away.
Yeah, I mean, that happens.
In the crypto space, some crazy stuff has been going on, which I think I'm going to get you to talk us through it.
Yeah.
So, Kash, who is Sam Bankman-Fried? I've already pronounced his name wrong.
Sam Bankman-Fried.
Even though we just talked about this.
So Sam Bankman-Fried has been a very naughty boy. So up until recently, he was on the cover of Forbes for being one of the richest people. I think the richest person under 30 in the world. And he managed to get there after starting his own crypto exchange called FTX. Maybe just a month ago, maybe a bit before that, FTX was often in the top 4 biggest exchanges in terms of trading volume, oftentimes in second place just behind Binance. And, when a lot of these large trading firms collapsed a couple months ago, FTX actually stepped in to come and help raise funds for these companies and buy them out to essentially help customers that were affected.
So it made them look very solid, didn't it, I guess?
Yeah, exactly. I mean, it was one of those, it was rated 10 out of 10 on most of these coin comparison websites in terms of trust. And it was one of every single person I would say that I know in the industry had, exposure to FTX by means of either holding the token or actually having funds on the exchange, because you're not always meant to, you're not meant to have all your funds on one exchange. So people were diversifying by going on to Binance and then also FTX and also Coinbase. So a lot of people had some exposure. But what happened early November is that there were discussions about essentially a balance sheet was released to Coinbase, I believe it was, which talked about the sister company of FTX, Alameda Research, which is essentially a prop trading firm. And they realized that a lot of their assets were actually in FTX or FTT tokens. And there was this whole that initially...
Can you just explain to everyone what that means?
So they were holding FTT tokens, launched by a sister company, which is kind of frowned upon because in a way, they were using those tokens to actually put down as collateral and get loans from elsewhere. So it's kind of like you create your own tokens, you lend it out, and then you get you hold it out, you lend it.
So usually you might say, here, take my car and lend me £10,000. And then if I don't pay back the £10,000, at least you have my car.
Exactly.
In this case, they've given them tokens that they've made out of thin air as collateral.
Exactly. So they had essentially created their own tokens and used that as collateral, which is a big no-no, generally speaking. They also realized that a lot of the assets that they were holding were illiquid. So if they wanted to sell those tokens, they wouldn't be able to because there was simply not enough funds on the market to actually recoup the amount of money that they had. So what happened was many years ago when FTX was first, starting out, Binance was actually one of the first investors. In 2021, I think they sold a portion of their holdings. They were actually bought out by FTX for, I think, $1 billion or $2 billion. But Binance essentially held another $500 million worth of tokens at a time. And CZ, the CEO of Binance, came out and said, look, we're thinking to get rid of our tokens following, the news that this balance sheet had leaked to the press. So once they'd looked at the balance sheet of Alameda, they were like, okay, there's something fishy going on. We want to get rid of our FTT exposure. What that created was essentially panic in the market. And of course, everyone started selling off their tokens, which meant that the collateral that they had put down to get all these loans was not really worth what they initially said it was worth.
So it's like dropping in price because of
exactly,
this. Yeah.
Exactly. And that essentially caused the FTX price to rapidly decline, creating a sort of bank run on FTX exchange. And during this time, Sam Bankman-Fried was tweeting out that, everything's fine. All assets are backed 1-for-1. And then suddenly out of nowhere, there was news that he's planning to sell FTX. Binance was going to acquire FTX pending, further due diligence. But after around a day or two, I think they realized that there's something seriously wrong at that company. They stepped back, and that caused, the price of the FTT token to crash even more. I think at the time of this call right now, it's around $1. So it's gone from $22 to $1, crashing around 98, 99%, all within a couple of weeks. They later realized that, I know, it's not set in stone yet, it's not proven yet, but there is speculation that what Sam Bankman-Fried was doing was taking FTX customer funds and trading it. He made some risky bets and he lost it, which means that a lot of customers are now out of money and they owe customers and other people around $10 billion.
Wow, that's a lot. So it was these two companies. You've got FTX and then you've got Alameda Research, which are essentially run by the same people, kind of.
Essentially, yeah.
And it sounded like the way they were using money between the two companies was just however they felt like they should, rather than sticking to kind of.
Yeah. So over the years, they'd repeatedly said that, we don't share any information. We're not, yes, we're affiliated, but we're not sharing information. We're not sharing funds. But there's
I didn't realize they'd said that in the past.
So they had said that because there was always speculation online about how the reason Alameda Research is so good at trading is because they're seeing what trades people are putting on FTX and going against that, or they're deliberately going to liquidate people on FTX using the information that they have. But, they've always denied that. And it was kind of accepted that, okay, they're telling the truth because it's a crime to do that, it would be fraud. But now it turns out, apparently, allegedly, that had been the case. And they've essentially filed for Chapter 11 bankruptcy. And many believe that it's going to take a couple of years for that to fully resolve. And
Sam Bankman-Fried has been active even during this bankruptcy process. I think the people that, so when, I didn't realize this, but I think when a company like this claims bankruptcy, somebody else comes in and basically becomes CEO and kind of tries to sort out the company and work out what's going on. So a third party.
Yeah, so he's no longer the CEO. And he actually mentioned on Twitter how, 8 minutes after, or a couple minutes after filing for bankruptcy, he actually got enough offers to fix the hole in the company, in the company's funds. But since then, the new CEO who stepped in has said, okay, look, he's not affiliated with the company anymore, so essentially disregard what he's saying. But there is an active investigation going on right now, and Sam and his colleagues have essentially moved out to the Bahamas, which is where they have their headquarters. And a lot of people from the crypto community have actually just yesterday and today have flown out to the Bahamas to look for him.
Oh wow!
They're creating a content out of it.
Oh right, okay.
Because I think they're doing that to protect their backs in a way, because then it kind of becomes dangerous. It becomes a sort of threats. If they're flying out to find them, what does that mean?
Yeah.
So they've clarified on Twitter that they're only doing it for fun, and they just want to have a talk with him or interview him and whatnot. But we'll have to see what happens.
Yeah, I imagine, because there's a lot of people who've lost a lot of money because of his actions, and it's also, it's not just losing money in a market.
Yeah.
You taking that kind of risk. It's the lies and stuff. It's not, the company didn't present what it was doing
Exactly.
honestly.
And an exchange, if you are, trusting the exchange to hold your funds, they're not allowed to use your funds for trading and making risky bets, which is what FTX seems to have done here. But yeah, we'll have to wait and see what happens.
So maybe we can go on to sort of talk about central exchanges in general, and what people should think about if they're using them. But also, I got two other questions specifically to do this. One was, did you see the leaked messages that Sam had exchanged with I think it was a journalist?
Yeah, he claimed it was a friend, but then she turned out to be a journalist.
Yeah,
and he was under the impression that those won't get posted online. He thought it was just a private conversation, but she essentially posted those online. Were you talking about how he was pretending to be sort of altruistic? And
yeah, he in those messages, he quite specifically said that, like, it was a PR stunt to basically pretend he cared about.
Yeah, I mean, I saw somewhere where he said he deliberately didn't cut his hair and tried to look like a nerd in a way, because that would help him raise more money.
Doing
Because
the
people
Vitalik,
would just consider him to be one of those, he's just gonna just write some code on his computer and make sure
it works.
That's
really,
right. Yeah, and essentially it works. It just goes to show that these companies who do a lot of due diligence, they're not actually doing it, and perhaps they're just basing their decisions on, I don't know, first interactions, I guess, or just general. I don't know. Maybe it's not as deep as we think it is.
Well,
There was this post online that showed, I think, one client lost over $280 million, a single client.
Wow.
So there's definitely a lot of people looking for him, and they definitely want answers.
Yeah.
But we'll have to see. It's a developing situation.
I think in terms of, like, from what I've read about sort of venture capitalism and getting funding for companies, if a venture capitalist thinks you have an idea and if you're already somebody that's run startups before and things like that and proven yourself, they can invest heavily in you just if you've got an idea. I mean, I don't think Sam Bankman-Fried had done anything before this, but if investors were caught up in the hype and and other people are investing, they see all these other companies investing, then maybe their sort of due diligence stuff is a bit more lax. And also, like, this whole maybe we can talk about this now, is that the whole space has been a grey area of regulation this whole time.
Yeah.
They're not regulated like a stocks exchange, for example.
Yeah. So his explanation was that there was a trade that he didn't realize how much leverage was on it. So he essentially miscalculated the leverage, and that caused them to get liquidated, which meant that they didn't have enough funds. But no one's really buying that. And I think he's going to continue arguing that that's what happened. But I think everyone's convinced that, he just used customer funds to bail it all out, all of these other companies out, hoping to make the money back and pay everything back.
He's saying one trade.
Yeah, he said one trade went wrong, but there was a lot of money on that trade, and there was more leverage than he was under the impression of. That's his excuse at the moment, but I don't think anyone's buying that.
And he could ultimately end up in legal trouble for this, I guess.
Yeah, definitely. There's an ongoing investigation right now. A lot of people think he's going to serve many years behind bars, but there's also a group of people who think, because he's continuing to tweet freely and live seemingly freely in the Bahamas right now, that he's kind of going to get away with it,
And so, in response to this, other exchanges, Kraken, Binance, Coinbase, they started releasing like proof of
Proof of
reserves
reserves.
stuff,
Yeah.
which is yeah. Could you just explain what that is, and then maybe
Yeah, so proof of reserves, because the blockchain is essentially a public ledger and anyone can verify what assets are held where. These exchanges, they are in control of hundreds of different wallets, and they've essentially released this information out to the public so they can every user can check to see whether the funds that they hold on their account is actually held by the exchange and not been lent out or used elsewhere.
Yeah.
And a lot of these exchanges have started doing that, including like the ones you mentioned, Binance, Kraken, and Crypto.com, and a bunch of others.
Yeah, to show they've basically got the reserves. I've seen a few people kind of questioning some of the proof of reserve stuff. Is any of that? It seemed like Kraken has been the most transparent exchange. And
Yeah, I think they've had proof of reserves from years ago, if I'm not mistaken. So they're kind of leading the way. But yeah, the Kraken CEO, he's questioned the whole idea of proof of reserves, wondering whether it's actually a good way to prove what reserves you have, because even if it's on chain, who knows whether you've lent it out to other parties or whether you're essentially using it as collateral for a trade off chain. It remains to be seen where we go, but I guess it's a step in the right direction with this.
Yeah, I mean, he said like your kind of assets don't mean anything. Your proof of reserves don't mean anything unless we know your liabilities.
Exactly, yeah.
But also, I think a lot of people are kind of gunning for Binance as well now, just because I don't know, they want things to fail, and that would be the biggest kind of.
Yeah, I mean, people have always had it in for Binance, it seems. I think, especially these competitors in a way, because Binance, as far as I can tell, has over 90% or maybe even more market share. If you look at the percentage of volume that Binance sees, none of the other exchanges come even close. But I would highly doubt if Binance is actually, lending out funds, because they're making maybe 9 figures a day, high 8 figures a day, just off trading fees, So even if there is a hole, then they would likely make up for the hole from their revenue, in a matter of weeks.
They've also been able to operate internationally, like they've been able to operate here in the UK and stuff. And there was a period of time I remember where they were. So I don't know if they're regulated officially, but they were having loads of meetings with regulators to be able to do that. So
they're actively in talks with regulators around the world. I know trying to get as many licenses as possible. I think they recently got one for Dubai, Cyprus, and a number of other countries as well.
So what are your current feelings about the different centralized crypto exchanges? And then maybe we can talk quickly about, guidelines and advice for how people could spread their money out across.
Yeah, I think it's a good question. I think one of the first things when we first started this service was that try not to hold, significant funds on exchanges, even if it is Binance. Always consider putting your funds, if it is significant to you, in a private wallet. That way, if the exchange goes bankrupt or if it gets hacked, then you're protected. Generally speaking, exchanges nowadays have better security than many years ago. Binance is number one for a reason. They have industry leading security on that exchange. But again, if it is significant, you should always hold your funds in a private wallet.
But then I guess the trade-off there has always been, it was more simple to open an account with an exchange like Binance or Coinbase, because it's like opening an account with anywhere else, really. When you get into the world of managing your own crypto funds, you have to learn to do some new things.
See, that's exactly it. So there's a trade-off. So if you hold funds on an exchange and it gets hacked, there is a possibility that you could get your funds back through insurance funds if they have it. I know Binance has one. I believe Coinbase has one as well. But there is no guarantee, But if you hold your funds on a private wallet, then if you look after it, it's very difficult for a hacker to get access to that, it is a trade-off. And again, if you keep your funds on an exchange, it's more convenient when you want to trade, or it's easier to sell when something goes wrong. For example, if you want to buy the dip, if you have funds actively ready on the exchange, you're better able to do that, as opposed to if you kept it in a private wallet, you would have to send it from a private wallet to an exchange, wait for it to be confirmed before you can actually use the funds.
Yeah. So yeah, it's a decision people have to make, whether but I think if you understand the risks, of the different ways of holding crypto, then you can make those decisions.
Exactly. Yeah.
And then not be too shocked if the worst happens, hopefully.
Exactly. And I would recommend the hardware wallets that I use myself are Ledger and Trezor, and then you have software wallets such as MetaMask, Trust Wallet, Coinbase Wallet. These are all very good.
Yeah, we've seen a few people in the Crypto with Cash community kind of move across to hardware wallets after this.
Yeah.
And it can be a bit daunting at first, but there's a lot of guides and information out there now to basically help anyone that's making that transition.
Yeah, exactly. And of course, if you're part of the community, just send over a message.
Yeah,
and we'll help you straight away.
I just wanted to talk about one other kind of aspect of this, and that's a token like FTT dropping, I don't know, 99, 98% of its value. And it made me think, I mean, that's shocking. And I can't remember if it was in the Crypto with Cash portfolio or not, but it made me think about odds and betting in relation to crypto. Like with crypto, we basically, well, maybe you can put this better, but in my mind, it's always like you're making a portfolio of coins. Some are big ones like Bitcoin and Ethereum to sort of the blue chips of your portfolio. And then you're making kind of essentially high risk bets on loads of smaller coins, and some of them will go to zero, some of them will disappear, and then you're kind of hoping some of them will not, you're doing the research to kind of hope that some of them will 10x or greater.
Yeah. So it's interesting you mentioned that, because I think it goes back to decentralization. Not diversification. So what we've been doing is there are different exchange tokens out there, centralized exchange tokens, and we're not just putting all our money in one. We're diversifying. There's also decentralized exchanges. So again, we're not putting all our funds in one decentralized exchange. There's a couple that we have in our portfolio, because again, if one gets hacked, I mean, there's been decentralized exchanges getting hacked before, DeFi protocols getting hacked. Ronin, for example, was hacked for $600 million. And that's why it's good to diversify, because if that happens to a project that you've put all your money in, then you're essentially at zero. Whereas if you diversify and something like that happens, then yes, you get a hit. There is a certain percentage that you lose, but you have the rest of your stake elsewhere.
Yeah, I think it seems like an obvious point, but when I read sort of crypto social media, a lot of people aren't diversified. They maybe got some Bitcoin or whatever, and then they've gone all in on like Dogecoin or some like one or two.
Yeah, you do hear stories like that.
Yeah, and that's not being diversified. It's being aware of, I guess, the different, like you say, the different kind of crypto sectors. Like, okay, we've got decentralized exchanges, we've got all yield aggregating cryptos, all kinds of stuff.
And that's the thing, you really got to be careful, no matter how confident you are in the project, and no matter how well it's doing. Like FTX, the reason it's caught so many people out is because it was second, third, fourth, just after Binance in terms of trading volume. Nearly everyone had exposure to it in some way. And even if they didn't have exposure to it directly, many of the other parties or platforms that they were using, they had exposure to FTX, because again, they're trying to diversify at the same time. They're not all using Binance, because if Binance goes down, then they essentially have nothing left. So that's why diversification is definitely important, and I think this is a great lesson going forward.
Yeah, I wonder. Part of me wonders if in the next bull market, the idea of decentralization, cryptos, there's different ways to measure the decentralization of a cryptocurrency, and whether that will play a more important part in people's investing decision. Like
Yeah.
how much control do the people that have made this token have over the token, the ecosystem, etc., or is that spread out, around the world, around users, etc.? Like, or will people learn from this? I guess.
Yeah, we'll have to wait and see.
Yeah. Okay. Do you have a message you want to put out into the crypto space for anyone, Cash?
A message is, I think it's an important one that I've mentioned before. It's the fact that, when the markets are down, everyone kind of forgets about it and they go on and find something else to occupy their minds with. But I feel like if you look back at the history of crypto, the best times to actually be accumulating and dollar cost averaging is when everyone's forgotten about it and found the new shiny thing. Right now, the prices are low, and yes, they could go lower, but they represent a much better, entry than when it was $69,000, for example, for Bitcoin, or when Ethereum was nearly $5,000. So yes, it could go lower, but a lot of people believe that the worst is over, and now is a good time to start accumulating in dollar cost averaging, which is also actually a lot of these exchange owners and other prominent traders have started doing.
Right. Okay. Have they've started doing that recently? Have they?
Just recently, yeah, after this FTX collapse, because essentially a lot of people capitulated. One of the worst things that you can imagine has already happened, and those who wanted to sell have already sold.
The prices have been relatively stable in relation to what's happened over the with FTX crashing. So there we have it. Yeah, because if you think if I buy Bitcoin now and then it drops, if you're dollar cost averaging, which is putting in a little bit, say every month or whatever, then you're going to benefit from that lower price.
Yeah, exactly.
But then you're investing in cryptos that you believe have long-term potential that you've done the research on.
Exactly. Yeah.
Okay. All right. Well, thank you very much for your time today, Cash.
Thank you very much for having me, Duncan.
That's all right. Hopefully next time we speak, we'll maybe have a positive crypto story. Although I guess prices being depressed and being able to buy in cheap is pretty positive.
Yeah, nice. I like that.
Okay. All right. Well, and thank you everybody for listening. If you had any questions or any topics you'd like us to discuss, you can drop us an email or drop us a comment on YouTube. We appreciate it if you like and subscribe. I think it's just basically me liking the videos. But we always appreciate that. And thank you again for listening. And thank you for your time today, Cash. And we will sign off.
Thank you. Take care. Like, comment, and subscribe.
Yeah, that's it. You said it much more succinctly than I did.